All right, here we go. Hi, everyone. So what if there was a way to buy a home where you had the seller help pay some of your mortgage for the first couple of years? Is that something you'd be interested in learning about? Heck to the yeah, right?
Absolutely. Yes.
So I am super excited today to share our Ask the Expert topic about giving our buyers another tool when it comes to loan options. And I am more excited to have with us here today the beautiful and talented Bonnie Ferraiuolo, a local lender here in the beautiful Pacific Northwest. And we're going to be speaking today about a particular loan option. I'm not going to give it away. So Bonnie, why don't you please go ahead and give us a little brief background about you?
Yes, I would love to. Well, first off, Happy New Year, Susie, and everybody
Happy New
watching.
Year.
This year is going to be a phenomenal year for everybody. I just know it. Well, again, my name is Bonnie, and I am a licensed loan officer here in Washington with West Coast Mortgage Group. So quick 60 seconds about myself. So I was born and raised in California, moved here about 4 years ago with my husband and 3 children. And I've been in the industry now for 20 years, which is really hard to say or really hard to believe, actually, because 20 years has actually gone by so fast. And, it's been a bit of a roller coaster, I will admit. I have worn a lot of different hats in the 20 years that I've been in the industry. I started off as a processor. I worked behind the scenes in the closing department, negotiated short sale. I actually was even, I don't know if you know this or not, Susie, but I actually was a real estate agent for a couple of years in
Oh,
California. So with all my experiences, I feel that it has certainly humbled me and has given me the resources to be able to give back to homeowners and help them out. And I'm very grateful for all the opportunities that I've had.
I think this is one of the ways that we actually really connected was just the desire to want to help our people,
Mhm.
loving on our
Yeah,
people.
yeah,
So
absolutely.
we all know that the last few months, a lot of the hot home topics have been all around, inflation, interest rates. There's been a lot of static from the market, or not the market, the media, getting everybody hyped up. So I'd love to know from your professional perspective, what do you see as more of a reality in our current lending landscape, if you will?
Yes, I love that. I love the question and thank you for asking it. To be honest with you, Susie, it is starting to look really nice for us. We're going into the year nice, improvements across the board. So the feds are watching, right? They're watching all these reports that just came out the end of the year, and oh, that's hilarious. And they're seeing that there are improvements, which it's looking like so far that if there are going to be any rate hikes, which everybody is really concerned about, that either one or two things are going to happen. Either one is not going to be as aggressive, which is going to be nice because last year was very aggressive, or two, it might not happen at all. Right. Of course, nobody knows the real answer and what's going to happen on how this is all going to pan out. But so far, the market is showing improvement, which is exactly what they were aiming for. 2022 was a very, very volatile year, very aggressive, very volatile, and it hurt a lot of people, a lot of people. But we're working towards improvement, which is really nice. And if we want to talk about the end of the year, December 2022, applications were starting to come in, phones were starting to ring, people are starting to get excited, and the momentum was starting to build. And now here we are, 6 days into the new year, and applications are up. People are getting out of their house. They're realizing life goes on, right? Even though interest rates might be at 6, 7, 8%, life still has to go on. People are still moving jobs, relocating. They're falling in love, falling out of love. Babies are being born every single day. I think, what is it, a baby a minute?
I,
So, and people are still also moving out of homes. Students are going to college, so people are needing to downsize and upgrade and whatever the case is, life still goes on. So
Absolutely.
lots of wonderful things happening.
Nice. Well, I know one of the options that we really haven't been able to talk that much about over the last couple of years, but I think now is a perfect time to help educate our buyers is a buy down loan, which you and I have talked quite a bit about. So maybe we can start by simply explaining what is a buy down loan and how does it work?
Yes. Oh, I love the buy down. It's my favorite feature.
Right?
Yes, the buy down loan. So a lot of people don't know what the buy down is simply because we haven't had to use it, because we have been not only in the seller's market, but for the past few years, we've also had phenomenal interest rates, right? I mean, there are people out there that capitalize on 2.5% rate. So this buy down feature has been around for many, many years. It's a temporary rate reduction, not to be confused with a permanent rate reduction. And what it does, it allows homeowners to get into homes at a reduced monthly payment for the first couple of years.
Nice.
So it is allowed on all conventional loans, FHA, VA, and USDA loans. Of course, it is geared towards purchases only. And then it is allowed on fixed rate options. So you're going to be looking at, the 30-year fixed, 20, 25, 15, 10 rate options for homeowners.
Sweet.
Yeah.
Apparently, while you're describing this, my dog would like to come see this information. So,
I mean, everybody needs to know about this, right? So how this works, what is the buy down? How does it work? Let's just take a quick little example here. So you've got a basic loan amount of $100,000. If we're looking at the 2-1 buy down, there are other options to do a 3-2-1 buy down, again, the 2-1 buy down, and then a 1-1 buy down. But more specifically, we're just going to talk about the 2-1. So if you have an interest rate at 5%, your principal and interest payment is going to be $537 a month. For the first year, that 5% interest rate is reduced by 2%. So now your payment is based on a 3% rate, which now brings your payment to $422 for that first 12 months. On a monthly basis, you're going to be saving $115. On an annual basis, you had saved $1,380 for that first 12 months. Moving forward to the second year, your interest rate is reduced 1%, your payment's $477. Fast forward, you have saved $720 in that second year. So all in all, for the first 2 years, you have saved $2,100. On that third year and for the remainder of the term, your interest rate goes back to the 5%. So how it works and where the magic starts to kind of fall into place. So you as a homeowner is going to pay for the first year, again, $422. For the second year, $477. This $2,100 that the seller prepaid up front goes into a separate escrow account. So what will happen is for the 2 years, while you're making your monthly payment of $422 and $477, the servicer is going to go into this escrow account and extract the needed amount for that difference in interest. So what they're going to do is they're going to combine the two and make a fully amortized payment for you, Mr. Homeowner, Mr. or Mrs. Homeowner.
I love that.
Yes.
And first thing we would like to know, Cooper would like to know, where can we get a $100,000 home these days? First of all. But I will say, so as a real estate investor, one of the personal questions I always like to ask about my loans is to make sure my type of loan doesn't have any prepayment penalties. So does a 2-1 buy down, does that apply?
Great question. So with the 2-1 buy down or the 3-2-1 buy down or the 1-1 buy down, here are the details. So the seller or the builder must pay for the buy down cost. There is no prepayment penalty, and the buy down credit that the seller or builder pays can also be combined with any additional credit towards closing costs, which is absolutely phenomenal. I mean, it is a win-win situation.
That is amazing. Sign
Yes.
me up. That sounds great.
Yes, absolutely.
Okay, so now how does all this actually work?
Well, let's go into it. So here's what's called a buy down calculator, and I can certainly help you. And let's actually go into, I kind of put an example here, but let's go into a live scenario. Um, so here we go. Susie, why don't you give me just an average purchase price, if you may?
Depending on where we are, let's say, why don't we do a 550,000 and then maybe we can do 1 million, because those seem to be our two markets essentially.
550. And how much does your buyer want to put down?
Let's do a first-time home buyer. So let's go 3 or 3.5%. What do you think?
Okay, so let's go 3.5%. So then that brings your loan amount to 530, 750. Interest rate today, 6.5%. So then your buyer needs to qualify principal and interest at $3,354. So now that we're at it, we locked in on a 30-year fixed loan, 6.5%. That first year, your buyer's payment is going to be based off of 4.5%, which brings the payment to $2,689. Annual savings of $79.85. The second year, now your payment is reduced 1%. So now you're looking at 5.5%. Your principal and interest payment, $3,013. Annual savings, $4,093. Look at this. Your buyer had saved in 2 years' time $12,079. $12,079.
That's amazing. So while we're talking about this actual scenario, I had some clients that recently were able to take advantage of this, and just even with that first year of savings, they were able to purchase brand new appliances for the whole house, and it was huge.
Yeah, absolutely.
And they still have money left over.
Absolutely. There's no limit to what you can do with the savings. You can certainly use that towards furnishing. I mean, you can pay off one of your cars if you wanted to,
right?
You know, like reduce your overall debt. Absolutely. Financial freedom.
This is such great information. I really hope some people are getting some value out of this, you know? Mm-hmm. This is great.
Yes. Would you like to do another scenario or?
Sure. Let's go closer to 1 million, or right at 1 million.
Okay.
And on that one, maybe let's do a conventional, and let's say instead of the normal like 20% down, they put down 10%.
Okay. Excuse me. So we're going to go.
And easy math right there.
Oh, yes. Yes. Let me go. I don't know what just happened there. We'll just keep it at 6.5%.
Okay.
Okay, so now your principal interest based on these numbers here is $5,688. For the first year, again, your interest rate is reduced by 2%. So now your payments based on 4.5%. Principal and interest $44,560. For that year, you save $13,541, as you can see. Second year, interest rates reduced 5.5%. Monthly savings $5,110. Fast forward, $6,900 savings there, and a grand total of $20,483 savings in 2 years that the seller prepays for your buyers upfront.
Yeah, that's like life-changing. But also with something like this is if you're projected over the next couple of years to make more money in your job too. Exactly. This is beneficial for so many reasons. Such great information.
I would agree.
Awesome. Well, thank you, Bonnie, as always. It's just super informative. And if you, as a viewer, found this video valuable, if you'll please like and follow both of us for current market updates and information, all things real estate. And if you have any questions for either of us, our information is shown right there at the bottom, but I will also put that in the information, our contact. And if you have any questions for either of us, please reach out. We'd be more than happy to help.
Yes, thank you so much for your time, Suzzy. I am just beyond excited for what this year is going to bring. And, we just need to get out there and just let people know that it's not doom and gloom. Homeownership is very much so obtainable, especially with this buy down feature. I'm a huge, huge advocate of it, and, certainly available to help you or anybody else that is looking to get some answers.
Perfect. And if you guys have any questions of market information or different loan programs that you're interested in learning about, please comment, and then we'll make sure and create some content for you. All right.
Thank you.
Thank you. Have a great day.
You too.
Bye-bye. Oops.